Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Wednesday, January the 25th, 2017. Looking at a chart of the gold futures on the daily, you can see currently we're at 1199.80, and for the most part, you can see that the market is trading inside of the previous day's bar, but we did have a continuation pattern to the downside today as we hit 1192.60 after hitting 1209.30. So that's kind of where we are right now. Continuation, dancing right on that trend line support. I think we're setting up to go higher here and eventually break out of the Kumo cloud. But just in case we don't, then this is looking like it could roll over and fall off the cliff here. We just don't know. We're trading right here inside this Kumo cloud, and that's usually uncertain. We're consolidated price-wise. If you take a look at the weekly chart again, it's behaving right here at the resistance points of the trend line in the bottom of the Kumo cloud. It's actually respecting those price levels. We'll see if we can move out of that and get a close above 1200 by Friday. That will be bullish going forward. A close below 1200 on Friday would be bearish and could see prices head lower and taking out prior supports. Taking a look at silver on the weekly, is the same identical picture as on gold. If you take a look at the daily chart, however, you can see that the silver is not necessarily in the Kumo cloud, it's right below it. So it's very interesting, consolidated sideways price action. Taking a look at the JNUG today. Now, it should be noted too that when we have these gaps on these opens and they don't get filled right away in the same day, that you should see an uplift on the next trading session. So I'm expecting JNUG to actually catch a bid and burst out of this Kumo cloud above $10. And I'm thinking that's going to happen as soon as tomorrow. Taking a look here at the SDAO, which is the inverse ETF for the Dow, you can see how it gapped down on its open today and proceeded to close near the lows of the session. All right, and looking all things equal, this is in a prolonged bear market, as you can see here, trading below trend lines and whatnot. I believe though that as this backs and fills tomorrow, we could actually get uplift and maybe make it up to the trend line of $42. So this could be good for at least maybe a $3 or $4 run. Why do we think that? Well, if you take a look at the Dow for the first time ever crossing 20,000, just as I told you it would, but then it kind of, backed off a little bit. It didn't just, bust through it and keep running like normally around these price levels. So I'm thinking we could see a little bit more of, back and fill action. Now here you can see on the futures, you won't see it as pronounced. So let me pull up. What's a good one? Let's go with DIA. Let's go with that one. Equities, as you heard me say time and time again, are normally much better priced than the futures. Okay, yeah, you can see it here. You can't see it on the futures because it trades 24 hours a day basically, but you can on the equity side. Okay, here we are. You see this gap up on the open. All right, so we should back and fill on that tomorrow, and we could get a little bit of piling on and profit taking like we normally do around new highs. So that is my anticipation, as the DIA, the Dow ETF, should probably correct back down toward the 196 level, and that should hold, and then we should bounce back up again. Taking a look here now at the crude oil, you see here crude oil just flattening out on the daily chart, just almost no price action whatsoever. Look at these ranges. You're lucky to even get a buck range here. There's just no price action whatsoever. Market's just hanging out. Taking a look at the US dollar. The US dollar also is being defended mightily, but it's losing the battle. I think it's going to fall below the Kumo cloud here and continue to plummet. We have another several cents to the downside. I think right now in the short term, 98 is the first target. This should bode well for the gold prices and also for the gold miners and the junior miners. Why do I say that? Take a look here at the GDX. All right, taking a look here at GDX, you can see here we gapped, and now I think we're going to rally and break out on the next bar up to fill this and then keep running toward 26. So GDX is looking good here outside of the Kumo cloud and ready to run. Taking a look at GDXJ. GDXJ is looking to do more of the same. Okay, here you are, busting out of the Kumo cloud and ready to run. That should bode well for JNUG for tomorrow. Stumbling on my words here. Okay, let's see what else do we need to check. Oh, I know. Here is the NASDAQ 100 that we have been watching and I've been telling you about. Okay, I did tell you that you could expect the following. We're at a crossroads where the market was going to break out to a new bull market, a spectacular bull market, or was going to break down into a humongous correction. Well, we're getting the bull market scenario. Here we are. We broke that 5,000 that held. Then we went to 5,100, which we were supposed to do. We bested 5,100. Went to 5,150. All right, new all-time contract highs. Now all the market has to do on the correction is to stay above 5,000. It has to close above 5,000. Okay, if we can do that, then we got the support in, and then it can build a base to go to 5,300. 5,300 is going to be the initial run before I think it even runs out of steam, if we can get this base done. So that would be a good sign moving forward. We had a wonderful part 2 webinar to the the stop runner indicator. Powerful, powerful, powerful stuff. So for those of you who missed that, you can find it in the Learning Academy. That webinar has been uploaded to the Learning Academy. Learn all you can on that. You want to check that out so you can know how to utilize the stop runner. Stop runner is our new indicator that we added to the post-wave price triggers. And what stop runner does is it hunts the stops of others. It puts you in the driver's seat to be your own central bank, your own Fed, your own Goldman Sachs, JP Morgan, etc., where you get to run their stops. And that's what we do. So the momentum price trigger, aka the stop runner, is what that is. And you can learn how to put things back into your favor and you take control. And we had a lot of fun with that today in that seminar and that webinar. So we're going to continue to do that. We're going to continue to press forward, and we look forward to doing bigger and better things even tomorrow. So remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And the rest of you, I'll see you over at the trading room. And to all others, come on over to pulsewavetrading.com where you can learn how to hedge your physicals and learn how to profit in these markets so that you can provide for you and your family. Peace out.